What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 1st of 2018. Well, folks, I hope you're all having a wonderful start to the month of August. Today, we've got a lot of exciting things to talk about on the daily update. Not only are we going to be taking a look at market valuations and doing some TA on the market leaders, but along with that, we've got a lot of exciting topics to discuss. First, I want to spend some time to dispel the FUD in regards to the Winklevoss twins getting their ETF rejected for the second time. There's a lot of different things that we have to factor in, but there's one key thing that I think people are completely missing that was the absolute reason for the rejection. Along with that as well, we have to talk about obviously traditional markets. There's been some interesting price action with the FANG stocks, and more specifically with Apple, which reported earnings yesterday. And I got to be fair, I made a wrong call, and we'll discuss a little bit about that, as well as the reason as to why I probably got that call wrong. And along with that as well, we'll be taking a look at commodities markets as well. So with that being realized, let's go ahead and dive into the video and take a look first at crypto markets. So as we talked about in the last video, obviously, markets have been taking a little bit of a correction over the past few days after the run up from 5,800 to around $8,500 for Bitcoin. And this is expected, as we were talking about again, with the breakout amongst the line of resistance, which we'll again take a look at on the TA side of things. This was expected. And we've seen some very positive rebound in price action on some plays, not only in Bitcoin, but also in the altcoin space over the past few hours. And a bit of those gains mitigated that we were seeing. As we can see here on the 7-day charts, we can start to see that most of these have either flattened out or are starting to turn up. This is exactly what we are expecting to happen from yesterday, because we were obviously looking for Bitcoin to make support on that line of resistance. Taking a look at market cap here, we can obviously see we've rebounded some, gained about around a little less than $10 billion in valuation back in markets. Again, holding quite nicely here over the past few hours. Going here to the yearly market dominance, we can see again, Bitcoin dominance still looks like it's on track to reach around the 50% mark, but has started to turn over a little bit over the past few hours. No serious change in trend here, so we'll move on to Bitcoin. So the reason I'm still set on the idea that Bitcoin dominance is going to continue to grow here over the next few weeks is because Bitcoin is going to keep on rallying to higher levels. I still believe that that's the case here for now. There hasn't been any reason for me to feel that it's not going to continue happening. We saw exactly what we needed to see over the past few hours. No serious amount of sell side volume over the past few days. And along with that as well, on the hourly, a nice ride of price on that line of resistance that's now acting as support. Now, this is not an instant guarantee that we're set for new highs, guys. We want to see this continue to build. Again, when you have such long-term resistance, it's going to take a lot of commitment to see that this becomes new support. And if we take a look here on the daily, what we might be seeing is something very similar to what we saw back here in 2014. Again, I keep building parallels with previous price action. And what we can see here is if we draw a general line of resistance, let me get the actual right points here, drag it all the way up here. We might see that this is going to continue downwards. Again, you can interpret this and draw this in different ways, but I decided that my interpretation would generally be along the lines of hitting the majority of the resistance points from the peak. And what we actually saw here is that price broke up above here and held on this line downwards for quite some time, for about a few weeks, until we finally started to get some momentum up in Bitcoin's price to get that 50% rally that we talked about. And again, we know that generally speaking, if we take a look historically at the data, we know that most altcoin rallies tend to be sometime in later August. So seeing as we just stepped into the month of August, we might have a few days where we need to test this, a little bit of a bounce downwards to see as to whether or not this resistance is finally in the past, as a form of reading market sentiment, price strength confirmation, and the TA side of things. So in this case, I like seeing that the RSI is getting out of that overbought zone. I like that Bitcoin's holding here. Volume to the sell side isn't drastic, and we haven't gotten any serious breakdown past this line. So until then, I'm holding optimistic on this. I'm not rushing to see Bitcoin make new highs in the short term, or at least in the relative short term. At the same time, I'm feeling quite confident with this. So nothing's really changed in regards to the TA side of things for Bitcoin. Let's go ahead and run through some of these market leaders. Ethereum, looking to see if we can test support at that level we were talking about yesterday, a little bit above 5 million Satoshis, what we saw back here in the past. Again, I'm betting that we're probably going to see this decline past the 5,500,000 Satoshi mark and come down in the longer term of things, down towards around 4 million Satoshis. And I think at that range, I'd start to get a little bit optimistic on Ethereum, because we might have a long-term breakout here. And what's going to be the catalyst for that? Probably Ethereum futures contracts or some major updates to the protocol, such as, for for example, implementing ZK Snarks or Casper, whatever it may be. So in this case, with the RSI being oversold here, in the short term, you might have a little bit of support here, which will help mitigate the RSI, probably bring it back up, but at the same time, not enough momentum to where I think there's a plausible trade here. I think you're going to get a continued downwards sell-off in, from my view personally, as on the TA side of things. Ripple over the past few hours probably being one of the best performers in the top 100. However, again, we've seen in the past that Ripple has slight rebounds. I'm not making a trade on this, guys. I wait for when we get the serious bottoms in at Ripple. Ripple seems to be a momentum player as we look historically at it. It's not something I want to touch at the moment. We did see, however, Bill Clinton came on as an announced speaker for this the upcoming speech that they're going to have for Ripple. So I won't even bring that up. I'm not going to give Ripple the publicity that it doesn't deserve. But again, I think that's not a good decision. Bill Clinton's an interesting character. Anyways, going on here, we can see that, again, Bitcoin Cash is still hanging relatively low. Again, not making a trade on this until this comes down another 10% towards 9 million Satoshis rather than 10 million. Going on to EOS here. EOS right now continuing still on the decline, a little bit of a rebound over the past few hours, but we're still looking for this to tackle some key support levels. I think the best bet it has is a healthy correction down here towards 600,000 Satoshis. That would be very, 60,000 Satoshis. Keep reading these Satoshi measurements wrong. Now, the reason I'm thinking that we're probably going to see this come down towards around 60,000 Satoshis is the matter of fact that this is going to be a 1/4 reduction from the peak highs up here, not to mention it's been a support level in the past, as we stated. So we can see that the RSI can hold in this level for quite some time, much like we saw the decline over here, and I think it's going to give enough leg room for this to continue declining. So now that a lot of the EOS hype is kind of fluttered, I think at this case, now that mainnet is launched, that we need to see this test towards some reasonable levels of price support. Going on here, let's take a look at Litecoin. Litecoin got a little bit of a rebound yesterday on Bitstamp. I think that's a really crazy volume coming out of the exchange, but nothing towards what we're seeing obviously on Binance and a lot of the other larger exchanges. I think that Litecoin is, again, in the range where we could start to get a little bit more comfortable. Again, it's a big even at 1 million Satoshis, but I'm going to wait to see. As we can see over here, we usually get a rebound, but let's see if it can actually hold at this level, if it actually starts gaining some traction. I think you're not going to see it move until altcoin markets really pick up. And this is a general sentiment for most altcoins, guys. As you probably noticed, I've kind of cut down on TA. I know there's a lot of different players. There's ADA, Cardano, which is holding quite well around this level that we've seen over here. NEO, for example, is down towards the range that I stated I'd wait for, around 400,000 Satoshis. There's a lot of plays in this market that are oversold, that are down towards levels that I'm feeling comfortable. But again, until I see a market reversal here, I'm not going to make the trade, because as we've seen, your capital tends to lose momentum comparative to Bitcoin, even if the USD is doing quite well. I don't want to trade in something that I'm going to be losing it at the moment. So because of that, I'm going to remain patient. We'll have to see if Bitcoin can continue higher and if altcoins can start to tailor that momentum as well, or if it's just simply going to be on Bitcoin with the talks of ETFs. So speaking of ETFs, that's going to be our next topic to dive into, specifically the Winklevoss twins one. However, I want to let you all know that later on this afternoon, if you guys could, please stay tuned. I'm going to be doing a video talking about the new content structure on the channel, some things that I want to put out on the channel, talk to you guys about, and then also to get your feedback on it as well. So please stay tuned for that. Please, definitely be nice about it, but at the same time, give me some constructive feedback. Give me some ideas of what you would like to see in that video. Leave it in the comments when that video comes out later on this afternoon. So please stay tuned for that, guys. Want to hear from you guys on that. All right, so let's go ahead and talk about this. There's been a lot of talk about Hester Pierce, or I might be pronouncing her name wrong, but she's one of the SEC regulators, and many people have been calling her the crypto mom because she was one of the 4 individuals that actually came out in the vote and stated that the decision to reject the Winklevoss twins ETF was a mistake. And she has some really nice quotes through here, and I want to spend some time to actually give her a little bit of a voice here to talk about why I like what she says and really how she ties in with the SEC's main core objectives, but also as to why I can understand why the other 3 regulators did not vote in favor of the Bitcoin ETF for the Winklevoss twins. There's a very clear explanation for this, and I'm going to actually show you all here in just a moment. But going on here, she had some really positive things to say about the crypto space, along with that as well, about how the SEC should play a role in it, and then also how she feels it's dangerous for the SEC to get in the way of this. So here's the main two quotes that I want to talk about. From my perspective, we need to be mindful about what our role is, and it's not to be the ones who decide which innovations and which technologies get through and which ones don't. Pierce told. So I really like that quote. I think it's the SEC's job to make sure that there is not fraudulent or manipulative activities, not to, not to allow retail investors to be exposed to these kind of things. It's obviously the stated objective of the SEC, but at the same time, not to restrict them from markets. Again, if we're to allow institutional investors to get a Bitcoin ETF first and not to allow retail investors to get it until later on, you're dealing with much larger prices, because obviously institutional interest would lead towards a higher price, therefore leaving them towards a market they could lose money much more plausibly by, let me put that in better words, could be much more susceptible to losing, because the price would be much higher at that range. So again, completely agree with this. And I also like this quote. I think it's a very dangerous position to put ourselves, the SEC, in, and I think it really does harm to investors, because it denies them opportunity. So again, the SEC's job is to make sure, as a regulatory agency, to protect people from scams. And I think the SEC, if they were smart, would realize that Bitcoin markets are maturing, volatility is getting reduced, and that an ETF would actually help reduce the manipulation. I talked about this in my open letter to the SEC. If you guys haven't seen that, definitely go watch that video. I think you guys would really like that. But again, the SEC should not be the gatekeeper here. The SEC should be looking out to spot fraud, and that's been mostly happening in the ICO space. So again, really like what she has to say here. But let's go ahead and dive into why the Winklevoss twins ETF got rejected. This was the second time the ETF has been rejected here. That they have submitted. It was the exact same ETF proposal, generally from what I could understand, that they had submitted previously before the SEC had shut down the door to ETF proposals back earlier in this year. So why did it get rejected? Well, it's so funny. What I love about news articles, guys, especially mainstream media, is that you tend to find the real juice and the substance at the end. There's always this end explanation that tends to have the substance, and it's the opposite end from the headline. This is why the ETF got rejected, and I've been talking about this with everyone that I talked to at the Hybrid Block Summit recently. The main focus of the SEC here is to make sure that price of the underlying asset, the underlying Bitcoin, the fair net value measurement of the underlying Bitcoin, is not susceptible to manipulation. Now, we've already heard concerns in the general market of Tether possibly manipulating Bitcoin, of whales manipulating Bitcoin's price. Guys, that's not even what the SEC is concerned about here. They were concerned about the fact that, for some odd reason, the Winklevoss twins, who have a decent amount of experience in markets, thought that the Gemini ETF could be based off of Gemini's own exchange rate. Okay? Now, what this means is that the underlying Bitcoin would be valued under an exchange rate of the Gemini exchange, one single exchange. This is completely contrary to what the CBOE was discussing in regards to Bitcoin futures, which would use a measurement of a variety of different exchanges, much like the CME's futures contracts. So because of this, this is the instant reason the SEC rejected it, because Gemini processes nowhere near enough liquidity or volume to actually be a susceptible measure, to be a prominent measure to measure the net value of the underlying Bitcoin. They only process around $30 million of volume, and only 2/3 of that is actual Bitcoin volume in the exchange. The rest is Ethereum and Zcash. So, into saying that, we have to understand in a very susceptible, this was a very susceptible flaw within the ETF proposal of the Winklevoss twins, and a very solid reason as to why the SEC as a regulatory agency rejected it. So just wanted to explain that to dispel some of the FUD. This doesn't mean that the SEC, as well as regulators like the one we discussed here, Hester, sorry, I'm very terrible with names, as you all know. Much like Hester, again, they're not negative on Bitcoin. They're negative on a lot of these proposals that are just being tossed at the SEC, that aren't going after meeting the concerns that the SEC has stated clearly for the past few months. Okay, so we really have to see that here. But I like hearing some positive words, and I think, again, more than anything, this is actually positive to see that the SEC has not downright rejected all proposals and is getting rid of the ones that don't meet its concerns. So it shows that they're actually quite optimistic. It's just going to take some time, guys. This doesn't happen overnight. All right, going on to traditional markets to talk about something that first I want to mention I was wrong on yesterday. I was a little bit tired when I got back, guys. I'm getting a little bit more acclimated. I'm a little bit jet lagged still at the moment. But Apple has smashed to all-time highs at $200 a share and is very, very, very close towards meeting $1 trillion valuation. And I'll be fair, I was not betting on this yesterday. I was betting that we'd see a continuation of the sell-off in FANG stocks. However, I'm going to explain why I think Apple is holding up here and why I think I was wrong on the call to at least provide some substance in that case and explain why this is happening. But we can see here, Apple had a gap up. It had really solid earnings. Gotta be fair, Apple's probably one of the actual companies that deserves to have the value that it does because it's at a relatively low PE ratio, and they've been having solid earnings reports in regards to making money every single quarter. It's one of the few tech companies in the hardware and software space that just continuously impresses with really solid cash flow. And they've got around, I think, $250 to $270 billion sitting on the book. And this is just, again, every quarter adding more capital to that pile. So a lot of people are excited about mergers and acquisitions. People are excited about, Apple being able to innovate and go into new markets. But look, let's be fair here, guys. Why is the stock price continue to move higher? It's the same reason that it has always been moving up over the past few months. And in fact, why Apple had one of its biggest moves back a few weeks ago back a few months ago, since 2011. And it was due to the fact that during their last quarterly report that they announced that they'd have a large amount of stock buybacks. Again, we talked about this. This is, again, one of the best trends that you need to be focusing on right now, guys. It's not a good trend, but it's an important trend in regards to the fact that, we see the largest amount of institutional selling, insider selling from these companies. It's a great thing to follow what they're doing, guys, to see what they're doing. Not to follow their trade specifically, but to look at what they're doing because they're in the know. They are in the know of how these stock buybacks are being implemented. So I recommend, again, you keep an eye on that. But, we have to talk about why this is happening, why we're still seeing a positive amount of price action in Apple, and why this cash flow matters. It matters because Apple can go on a buyback spree. Its corporate cash flow is superb comparative to Netflix and Amazon, which have been tethering on solid profitability over the past few years. And Facebook as well has had profitability, but again, not to the extent or the profit margins of Apple. Apple has been bringing in billions of dollars, and now with the tax laws changing, not only is that going to bring more corporate profits in, but it also means that money from offshore that they've had locked up for years, all this billions of dollars that Apple the billions of dollars that Apple has had is now going to be able to be spent. They mentioned last quarter that they're doing $100 billion worth of stock buybacks, and I think that trend is going to continue here. Now that we've reached around $250 billion of cash on hand, it would not be surprising to see Apple invest or commit more towards stock buybacks. And there was a caption here in this article that I think really summarizes towards this. So Apple reported a cash balance of $267 billion in April. On its April earnings call, CEO Tim Cook said that it would bring down the balance over time, but stopped short of specifying a timeline. So what Apple wants to do here is they want to take all this capital they have and put it to good use, but they need to distribute it. They don't want to put it all on one thing. They don't want to just simply put it on research and development. That would be tossing money at I'll put a lot of potential markets that might not even bring any value, so that'd be a waste on capital. And they also don't want to just put it all, for example, on stock buybacks or expanding retail stores. They want to have it in a distributed manner. At the same time, though, we've already seen $100 billion of that being committed to stock buybacks. And I want to go towards this quote here from the call that said, "We are not giving an end date to the program this time because the amount is very, very large," Apple CFO Luca Maestri said on the call. "But we also want to do it effectively. We want to make sure that we buy back the stock at the right time." That quote right there is the reason I do not believe in stock buybacks. Because what it's allowing Apple to do is it's allowing this company, which, to be fair, with all due respect, is actually buying with real capital. It's not living off much of borrowed capital, so I got to give Apple credit in that sense. But what it's doing is it's saying that, hey, we're going to be buying back shares with our capital, again, not real buyers on the market, it's the company itself. We are going to artificially prop up our price with our dollars, and no matter what the market is feeling, we're going to continue that buying activity. So it starts to become a self-fulfilling prophecy. Now, as much as that is real capital, and that is capital that Apple has earned and can risk as much as it wants now legally, I think it's wrong, because when you go through this process of just saying, look, we're going to buy any time this dips, we're going to buy any time that Apple goes down as a company, it starts to build an artificial sense of perma-bull activity. It starts to say that, look, if you're betting against Apple, you're going to get crushed. You know, it's this continuous hype cycle that it's just going to keep going up and up and up and up and up and up. So that's the big paradigm right here. I think out of all companies, unlike Netflix, which is pretty high in corporate debt, as well as some of the other large technology plays, Apple is pretty cash steady. So I think we're going to see the $1 trillion valuation. I think Apple's going to probably continue a little bit higher after this earnings report. But I would be very, very, very careful, because we don't know when the stock buybacks are going to start to falter. And even if Apple has a ton of buy side activity, in fact, I think they're the second largest in stock buybacks, the largest or second largest in stock buybacks, that capital can still get outweighed by the sell side pressure of hedge funds, of larger investors who are cashing out and diversifying outside of equities markets. So again, just keep it on your radar, folks. That's the biggest thing I can say. Stay data driven, stay focused on where the money is flowing and what the insiders are doing at these companies, because even though they're using these tools to prop up the price, you should be following what they're doing. Because if they really believe that this is going to hold up Apple's share price over the long term, they wouldn't be selling their shares, okay? So that's what I'd be saying. Outside of that, let's go ahead and do the commodities precious metals report here. Now, I want to focus in on gold before we take a look at silver and uranium, because gold has continued on its weekly downtrend here. So we're taking a look here. Gold is almost steadfast towards around $1,200 per ounce. I think that this trend is going to continue to $1,200 at the moment. And even for the longer term trend, I'm betting that we're going to enter in towards a longer term commodities bear market if equities continue to rally as they are. And we can see here that gold on the weekly can drop quite drastically in a short period of time. I think we can pick up momentum now that we've broken below not only the ascending triangle here, but also below the 200 week. And we can see as well that the RSI can remain in the oversold zone on the weekly for some time. We've seen these more dramatic price drops in the past for gold, and I think the momentum is only going to pick up here until we find a bottom. Now, the only levels of support we have are really here at 1200, around 1120 down here that we saw in the past, and then down here at around 1000. But I think we're actually going to get a full pullback towards $1,000, because this was the last serious level of resistance before gold made a rally up in the future. And we've obviously seen it was close to bottoming out down here, but we never really tested that level. So I think we're going to see that. I think we could see a pretty extended oversold level on the weekly and the RSI for gold. Again, commodities markets take some more time. So in that case, I'm not trading gold at the moment. Same goes with silver here. I think silver could have a decent ways going down after breaking out of the wedge that it was building up and taking more of the bearish tone. We've seen that silver on the weekly can reach the oversold, have some more serious areas where price gets reduced, and I think we'll come back down towards this historic level around $13 to $14 that we saw back here. And again, if we see gold going more towards gold going down more towards $1,000 per ounce, that's not unreasonable to think that silver can come back down to these levels and test towards this range. So again, I'm starting to feel a little bit more bearish until we really start seeing a turn in equities markets. And we even know as well that even when equities markets turn over, much like it did in 2008, that we could still see a drop in commodities for the moment. So again, not too eager right now. There might be manipulation, there might be some corruption going on in commodities markets. Some people argue that. No matter what's happening, guys, we can't argue with the price. It's what's happening right now. So we're going to have to remain patient on this. But I want to talk a little bit last on something that I am still optimistic on, and that is uranium, and URA specifically. So going on to uranium, again, as you guys know, I've been wanting to talk actually specifically on uranium markets, and if you guys would like to see that, I'd be happy to do a video on it. I just don't know how much of you really care about the commodity section of the daily updates, but I want to spend some time to talk about uranium. Uranium is the only commodity that I tend to trade or watch that is holding into technical pattern right now. It's still building up a very long-term wedge and on a very, very long-term bear market. I mean, this thing has been holding for the past few years. People have started to see that some of the larger producers, Cameco, everything has been starting to cut back production, and supply is starting to get gutted in a sense. Instead of glutted, being overcrowded or clustered in that sense, we're now starting to see a reduction. And along with that as well, uranium is starting to become more demanded. There's starting to be more demand for uranium because of the fact that we're starting to see reactors turn back on. This has been something that's been talked about for quite some time in countries like Japan that had the Fukushima disaster. There's starting to be a higher demand over the next few years, not only with newly constructed reactors, but also in countries turning them back on like Japan. So when this new demand comes in and the glut of supply is cut, now that we have a lower supply and higher demand, obviously it makes sense. Price is going to start moving up. And you can go to Cameco's website. You can see even with uranium futures contracts that price is starting to move higher, that people are starting to expect a higher price and a bottom in this market. So it's really, really exciting to see that. And I think that not only some of the smaller cap uranium plays are interesting to watch, but for a nice distributed and diversified holding, the URA ETF might be an interesting play to watch. Again, you got to do your own research, guys. I haven't made any trade on it, but if we get a breakout above this wedge here, if we can finally break past this line of resistance and break past the 200 week, I think this could be a serious, interesting play that to watch within the commodity space. There isn't much that's interested me at the moment, with gold and silver breaking out of the really solid multi-year technical patterns. Uranium looks like one of the few here in a market where commodities are at their cheapest ratio to the S&P 500 in 50 years. And not to mention, uranium has been in an obvious bear market for quite some time. So this might be the turning point here. It might be a really interesting market to watch. So I'd like to hear what you all think. What do you guys think about commodities markets? What do you think about uranium, silver, and gold? What do you all think about Apple beating on earnings and all of its cash flow? Do you think the stock buybacks can keep the price going higher? And what do you all think about crypto markets at the moment? I'd like to hear your thoughts on all of that down below and get a discussion going. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.